Are you ready to kick things up to the next level? The Uganda National Lottery brings you Sports Take 10. Predict the results of 10 football games and win big. With tickets at only 500 shillings, join the fun and make your predictions count with Sports Take 10. Sports Take 10, your ticket to football glory.
Uganda National Lottery. Dream, play, win.
Participants must be 18 years or older. Play responsibly. The Uganda National Lottery is operated by Ituba Uganda and regulated by the National Lotteries and Gaming Regulatory Board.
At Uganda Development Bank, we are committed to empowering communities by supporting projects that unlock excellent economic benefits for Ugandans through job creation, tax contribution, output value, and foreign exchange. We seek partnerships with projects that drive economic development in Uganda.
Vocational education does more of equipping of different skills, ranging from hairdressing, tailoring, catering, and so on. So those are basically the courses that we do, and we do them in different levels. My relationship with UDB came through Yuga Privi. I'm registered with Private Institutions Association. So one time we were invited for a meeting as proprietors of schools, and UDB sold in their idea of offering loans for some of us who are still developing. So Ray happened to be one of those that is not yet fully established. Of course, being a private institution, we didn't have enough structures. So I applied for a loan, and that is how our relationship started. And yeah, so I got the first installment, putting up the preliminaries and the substructure, and the structure is being worked on. I really want to thank UDB so much because the interest is pretty low, and I must say, UDB nafunamu. Thank you so much UDB for supporting vocational education.
Uganda Development Bank, inspiring development.
The Ministry of Health informs the general public that there are some cases of Mpox detected in Uganda. The ministry, working with partners and affected district local government, are doing their best to contain the situation. The signs and symptoms of Mpox are body rash, fever, general body weakness, headache, sore throat, nasal congestion or cough, and swollen lymph nodes. You can prevent yourself from getting infected with Mpox by avoiding close contact with people who have been confirmed to have Mpox or who have signs and symptoms of Mpox. Avoiding touching or sharing personal items like beddings, eating utensils, phones, or other belongings of a person who has the signs and symptoms of Mpox. Avoiding contact, including eating, with all wild animals, alive or dead, especially those known to carry the virus, such as rodents and monkeys, and those that appear sick or have been found dead. Getting vaccinated if you're among those who have been identified to be at high risk of Mpox infection. Mpox is treatable and usually goes away after 2 to 4 weeks. However, it can be severe, causing even death, especially among children, pregnant women, and those with other health conditions. For more information and support, contact your nearest health worker. Call the Ministry of Health's toll-free line on 0800 100 066 or send a free SMS to YouReport on 8500.
Live from UBC Studios in Kampala. This is Good Morning Uganda Extra.
It's a new week, and thank you so much for being with us on UBC TV. I'm Robert Cherabonyonyitono. That is in case you have just joined, because we are here every weekday from 6:30, and we kick it off with Good Morning Uganda, where we look at issues that affect you and also emphasize on ensuring that you're well versed with what is happening locally and internationally. Also some light moments there for you to spice up your morning with some light laughters and all that. So please make it with us every weekday from 6:30. We are here. Then an extension, which is Good Morning Uganda Extra. Now here, I usually have guests or a guest in studio and we discuss issues of national concern. Now this morning we are looking at mandatory local marine cargo and goods in transit insurance. Have you ever heard of this? Or do you have questions surrounding this? Well, be rest assured that the competent team I have with me this morning will do you justice as far as this is concerned. Now on set I have Bukenya John, who is the Chief Underwriting Officer, Jubilee Alliance. Good morning and welcome.
Morning, sir. Good morning, viewers. And we are happy to be here to tell you about the marine insurance, compulsory marine, which started 1st November, but which will, in the next 3 months, after 3 months, it will be compulsory for all people that will be importing goods to the country.
Okay. Well, and just next to him, I have Kakule Edwin from URA Customs. Yes, now when you hear that URA, Uganda Revenue Authority, I know most of Ugandans become attentive. What have they come to tell us this time? So you're most welcome.
Thank you, Mr. Chirabo. Good morning, our viewers. And as URA, we're also here to give you of what is our role, issues concerning local marine insurance. Thank you and good morning once again.
And later on, I'll be joined by Stephen Kadu, who is the Manager Inspection Insurance Regulatory Authority. He will be joining me later on the show. Now, I want to begin with the man from the insurance, from Jubilee. Bukenya, first and foremost, to our viewer, when you talk about insurance, in a layman's language, what is this all about? What if I say, well, I need an insurance for this? Just briefly.
Insurance in general is a cover that future protects anyone, protects you as an insured person for any future losses, protects you for future losses. So when you take on insurance, like for instance for the marine insurance, people would take the insurance before the goods probably are imported. That means you're anticipating in the future, in case I get a loss. Supposing we're importing goods from China and they're coming to Uganda, there are lots of hazards that could happen. There are lots of hazards that could happen, that the goods you could lose the goods, probably because when you take marine insurance covers goods on road, it covers the goods at sea, then it covers them even when they reach at the custom warehouse. So supposing you imported goods from China, and from China, sometimes China is a very big country, someone can import goods and the port is almost 400 kilometers away. So the insurance would start from the warehouse of the person who's selling you the goods up till to the port, then unloading. You see, there are whole others during loading. Probably when they are loading, the crane can have issues, and probably the container falls down. So goods will get damaged. So there's cover from the warehouse, there's cover at the port, then cover at the seas, on the high seas, because on the high seas, water could splash on the ship depending on the weather at sea, and that water could damage the goods. The ship can sink. You get it? There's been many cases where ship have collided and sunk. In fact, there were cases where we, some 3 years ago, from India, as one of the ships was moving from the port, the other was also docking, they collided and sank. All the containers were lost. I'll tell you that during that time, we had clients, many clients, who had their goods on that ship. But one of our client had insured they had 2 containers. So they had insured one of their containers with us. They had insured the other container from India. We paid them within 2 months, but they took almost over a year to get compensation from the Indian insurance company. So eventually I didn't know, because eventually the client stopped importing pharmaceuticals, but even when we stopped with them, they were still pursuing the Indian insurance company to pay them. So you see how this augurs well with what probably we are going to discuss with the team for having marine within the country. So now when you reach at Mombasa, in fact even before you reach Mombasa, you've heard of the pirates at the sea. It has happened where they come and ask for ransom, the Somalia coast. Then they ask for money. Let's say in the tune, sometimes it goes up as far as $10 million. So that, supposing the ship owners decide to save, probably the ship could have maybe goods maybe worth $50 million. And probably they have to pay a ransom of around 5 to save the big amount. So that $5 million, when it's paid, of course, it comes to insurers. It's not you, the insured, who will pay that, who the owner, the person who is bought the goods, but it will be the insurance to come in and contribute that amount. Like for instance.
So basically, this is to protect the goods in transit.
Transit.
But now we have a word: mandatory.
Mandatory.
Local.
Local.
Marine. In just in a twinkle of an eye, can you elaborate more on that? Has it been there and it's not mandatory? Has it been optional that now it's going to be mandatory? Then you're talking about exporting, I mean about importing goods, and have the word local. Local.
So mandatory, ideally, currently what has been happening is that importers have been free to get insurance in any country where they're importing from. They could either get it from local or they could get it from either China or India. But there was a law that was passed, which of course my colleagues from the regulator will expound further on the same. The law was passed and made it mandatory that any importer, anyone importing goods to the country must get insurance within the country. And if they don't, there is a penalty for that. A penalty which will be imposed if you don't have that marine insurance. There are penalties that you'll have to pay.
Now this brings me to URA. Now as far as implementation of this, where do you come in? What is your role? We usually see you in terms of getting tax, but here it's someone having shock absorbers in case uncertainty comes their way.
Yeah, thank you, Mr. Kirabo. Good morning once again. Kakule Edwin is my name, from Customs URA, specifically under a section called Document Processing Center. Now the Document Processing Center is the section that actually verifies the documents that are declared to customs, that declare the goods that are coming in. The question is that, what is our role in this now? As we determine the value of the goods. You have imported your container from China, of tires, of whatever. Customs, as URA, and basically under the East African Customs, East African Community, Customs Management Act, the value is determined with the Incoterm called CIF. Now CIF means cost, insurance, and freight. You go and buy your goods at a specific cost, that's FOB. You insure them as they are put on the ship or any other means that they are coming in. Then the cost of the freight. So a sum of cost and insurance and freight determines the value of the goods. That's why we call it the price actually paid or payable, a sum of that. But how do we come in? Yes, my colleague has told you that a law has been passed and now we are supposed to use local insurers. In the past, people have been getting insurance from their exporters. And they could give us maybe an insurance certificate under which you could add on and to get the actual freight that is done, is involved in the cost of the goods. But the coming of local marine insurance on our side, of course you have to know, for us, any policy that we're implementing must be by a law. I've had asking the question, mandatory now. For us, we come in to enforce that you're importing your goods. You must have secured insurance from where? Locally here in Uganda. And it saves us in a way. How? Of course, it goes without saying our interest is collection. That one goes without saying. It is going to be very advantageous on our side in that in the past, even people could not give importers or taxpayers could not give us the sum insured or the actual insurance that has been what? The cost of insurance that they have incurred to determine the CIF I've just been telling you. So this time round, with the local marine, and we know that actually you have secured insurance from here, it is much easier to determine what? The insurance, to be added on the cost and insurance to get the actual value of the goods. So ours is to enforce now. Please give us the cost you have incurred in insurance. If you have incurred it from here and with the collaboration with our colleagues here, it is much easier to do what? To get. By law, because you are going to ask me a question that, how have you been doing it? Even by law, we had to put a provision in the law that if somebody does not, if at all cannot ascertain the value of insurance, we could say that we could get a 1.5% of the what?
Of the goods.
Of the goods. But that way, either we may be cheating you, or we may be cheating what? Government. So this time round, actually, as URA and customs, we welcome this policy. First of all, it will benefit our clients. My colleagues, I think, will expand on, because if I think I get enough for them, your goods are insured from the source, the country of origin, to the warehouse. And it also advantages to ourselves that now, this time round, you can easily determine the value of the goods and the sum insured to ease derivation of the customs value, and also facilitate you easily so that we don't put any other inquiries. So sometimes when people come in and inquire, please give us an insurance certificate. That's if at all comes in scenarios where we even doubt the value of the what? The goods.
Now this takes me back to the insurance people. URA will tell you they're implementing the law. Yes. But what prompted this? And also, in the interest of time, let's also look at the benefits. What do I, yes, it's mandatory. I can't excuse myself.
Yes.
The taxman is watching.
Yes.
But to me, the person getting these goods,
Yes.
What do I stand to benefit?
Okay.
And also, to avoid people thinking maybe this is basically about taxation. What could have prompted this move?
Thank you very much, sir. Insurance all over the world protects economies of those countries. If everyone in this country was insuring, those at least who can afford were insuring, would have protected a lot. The economy, what they lose, they wouldn't have lost that. Because imagine that there are some economies which cannot run. Supposing there was no insurance, there are factories which burn down, but within a year are put back to production. Imagine if that particular factory had not insured. They would not be able to get the money to pay. even the banks are very willing to give loans because they know the person they're giving a loan has what? Insurance. In the event of a claim, they know the money will come back. So it's same comes to this marine. Supposing you're importing goods worth $10 million, there's no bank that will give you a loan knowing that you're importing and there are risks at sea, at road. Imagine the risks that are, the first example I gave you, for goods that are coming 400 kilometers or 400 kilometers from a factory in China to the port. Then from the port, there's loading, they're using cranes. Then from the port on high seas, it could take almost 15 days or sometimes 20 to Mombasa. Then at Mombasa, there's also unloading. Then from Mombasa to Uganda, there's also on the road. At first, you've also seen, I've seen on UBC several times when you're showing trucks that have had accidents on the road. Then from imagine you are from Kisoro, the goods have arrived at a warehouse in Kampala. But then from here, again, you have to transport them up to Kisoro. All that is insurance. So first, that is one of the benefits I'll tell you. The other benefit is that if you insure locally, now why is it mandatory within Uganda? Like the first example I've given you, there are even cases where we have clients who have insured in the market as insurers. A client has insures with you, but some of the goods they insure them from where they are buying the goods, others you insure them. Then there are cases where they've had claims of goods. We had a client who lost on that same ship, who lost a container which was insured. 3 containers were insured by us, we paid them. One of the containers which they had insured from the country where they were importing goods, they never got compensated. Because marine insurance has 3 covers. There's what we call Clause A. Clause A is all risks. There's Clause B. Clause B covers a few things from Clause A. Clause A covers everything, it's all risks the way it is, apart from a few things that they would exclude. Then there's Clause C. So ideally, because those guys in maybe anywhere abroad, I might not mention any country, they will give you the cheaper insurance, which is clause probably COB. Because you as a person who is importing, many people don't know what even is covered. So you have clause C. As the ship is moving on at sea, there are storms. The weather is so bad, and water seeps overboard, damages the goods. And then they reach Mombasa, you say my goods were damaged at high seas. Then the guy tells you, you took C. Clause C does not cover that. You get it? So what did we do as an industry? Because as I'm standing here, I represent all the insurance companies. Because Jubilee Alliance is going to be the leader of that consortium, which is going to cover all the marine insurance for goods coming to Uganda. But we are doing it as all of us as insurers. So we said no. Ours is going to be clause A. We don't want clause B, we don't want clause C. So that our people, our insureds within the country are covered for almost all the hazards that you might think of, apart from few things which are so clear. Because for clause A insurance or risk insurance, it will show you we are not covering this, we are not covering this, we are not covering this. So you are aware. You get it? They don't mention what they cover, they mention what they don't cover. Any other thing other than what is mentioned would be covered. So if you get a claim within, when you're as importers, there's unlikelihood. In fact, you will be paid if the cover is there, and if that peril that affected your goods has to be covered, we'll have to cover. We'll have to pay you. In fact, our regulator, IRA, you can just walk in there. They have a complaints bureau there, and report and say, you know, I covered my marine, and my goods got damaged, but insurers have refused to pay me. If that, the claim is genuine, and we have to pay you, we will pay you, because the regulators there will tell you, please guys, you have to pay. But imagine you got the insurance from maybe China, maybe India, any other country, Singapore.
Yeah, issues will be a bit complicated.
Who are you going to go to report?
Now, I'm also interested on the cost implication to the importer. URA. Let's go into this. The person importing, the element of cost implication.
Element of cost implication. Well, I'm meant to know that the rates they use at the moment are not the ones that the other people are using. The costs are a bit low, and the other issue is, I think I'll stand to be guided by him. When they're insuring, even they cater for the inland. Inland I mean from the port, Mombasa, or Dar es Salaam to Uganda. So it is embedded. That time it has been very hard for us. We have to apportion. If somebody has insured from China to Kampala, it becomes a problem. How are you going to apportion? To apportion the insurance part of it from you only consider the one from China to what? To Mombasa, then you leave the one which is inland, because it's not, the cost incurred there are not catered for in determining the value. But on our side, it is very advantageous. Two things: it is easier to determine the value of your goods. Then, if you are told to have any inquiries, we don't have to task you so much to go back to your exporters. We can inquire from the insurers that, please, is this the actual value that actually you insured? So I mean, this one has simplified the costs. The cost, and I believe the rates are there. I think you will give me more explanation to that. The costs, I think the premiums they're supposed to pay are not, I think they are relatively cheaper compared to what the importers have been incurring from the insurance in foreign lands.
Now that brings me a quick one to you. What happens to an importer without this certificate at the point of entry?
At the point of entry. Now, I think at the moment we are still in a window where it is not compulsory.
Honeymoon time.
Honeymoon time. And it's going to reach a time that it's compulsory.
Okay.
Now, if you don't have it, it may be a bit strenuous to an importer. One, you'll face penalties as per the law. Number two, of course, there's going to be delay. You have to secure that insurance. Then it will also cause more strenuous, because we even doubt the value at which you have insured, the value of your goods. Because I don't think the insurance regulatory authority will allow also to risk to insure where they don't know the value of of the goods. It has an implication on our side, because we want to collect the exact, not more, not less. And the insurance component of it is very important on our side. But like you have asked the question, what will be the implication? Of course, those are penalties that will be incurred by the client, and the unnecessary delays that will not be good for the importer or the businessman.
Well, before the deadline, prepare yourself, ensure you have what it takes. Allow me to go for a short break now. When I return from this break, I'll be having the regulator. Most of the times, Ugandans, when you talk about insurance, first, we aren't very good takers of insurance, apart from the mandatory ones. But also, even where it's mandatory, There's certain insurance cover I've always questioned. Why do I even have it on my vehicle? But the regulator is coming on board. Let's go for a break.
Live from UBC Studios in Kampala, this is Good Morning Uganda Extra.
At Uganda Development Bank, we are committed to empowering communities by supporting projects that unlock excellent economic benefits for Ugandans through job creation, tax contribution, output value, and foreign exchange. We seek partnerships with projects that drive economic development in Uganda.
Vocational education does more of equipping of different skills, ranging from hairdressing, tailoring, catering, and so on. So those are basically the courses that we do, and we do them in different levels. My relationship with UDB came through Yuga Privi. I'm registered with Private Institutions Association. So one time we invited for a meeting as proprietors of schools, and UDB sold in their idea of offering loans for some of us who are still developing. So Ray happened to be one of those that is not yet fully established. Of course, being a private institution, we didn't have enough structures. So I applied for a loan, and that is how our relationship started. And yeah, so I got the first installment, putting up the preliminaries and the substructure, and the structure is being worked on. I really want to thank UDB so much because the interest is pretty low, and I must say, mu UDB nafunamu. Thank you so much UDB for supporting vocational education.
Uganda Development Bank, inspiring development.
The Ministry of Health informs the general public that there are some cases of Mpox detected in Uganda. The ministry, working with partners and affected district local governments, are doing their best to contain the situation. The signs and symptoms of Mpox are body rash, fever, general body weakness, headache, sore throat, nasal congestion or cough, and swollen lymph nodes. You can prevent yourself from getting infected with Mpox by avoiding close contact with people who have been confirmed to have Mpox or who have signs and symptoms of Mpox. Avoiding touching or sharing personal items like beddings, eating utensils, phones, or other belongings of a person who has the signs and symptoms of Mpox. Avoiding contact, including eating, with all wild animals, alive or dead, especially those known to carry the virus, such as rodents and monkeys, and those that appear sick or have been found dead. Getting vaccinated if you're among those who have been identified to be at high risk of Mpox infection. Mpox is treatable and usually goes away after 2 to 4 weeks. However, it can be severe, causing even death, especially among children, pregnant women, and those with other health conditions. For more information and support, contact your nearest health worker. Call the Ministry of Health's toll-free line on 0800 100 066 or send a free SMS to YouReport on 8500.
Live from UBC Studios in Kampala, this is Good Morning Uganda Extra.
Welcome back from that short break, and thank you so much for being with us on UBC TV. We are still looking at the mandatory local marine cargo and goods in transit insurance. Now, as long as you're importing goods into the country, this is something you must pick interest, or if you have a person in this business, so that in case of anything, when these goods are in transit, you'll rest assured that you have shock absorbers and you'll be returned to the state like nothing really happened. And to me, I think that is the basic of insurance. That, well, in case of uncertainty, you're very assured that all is well because you took on an insurance cover. Now, I earlier told you that we'll be joined by Stephen Kadu, who is the Manager Inspection at the Insurance Regulatory Authority. You're most welcome.
Thank you, Chirabo, and good morning, our good viewers. As Chirabo has mentioned, my name is Stephen Kadu from the Insurance Regulatory Authority, and I'm so pleased to be part of this arrangement this morning. Well,
quick one. When we talk about the Insurance Regulatory Authority, what is your mandate?
Thank you very much, and that's a very good question. Insurance Regulatory Authority is a government entity that was put in place by an act of parliament. It has been in existence for quite some time. It started as a commission and eventually matured into an authority in 2011 when we had the 2011 Insurance Act. Subsequently, we have had amendments of the Act. We did an overhaul of our Insurance Act in 2017, and we laid strictly what we are supposed to look at. In the Insurance Act, we have quite a number of functions that we undertake. And among them is to supervise all insurance activities that are being undertaken within the country of Uganda. We secondly do license all insurance companies. Currently we have over 30 insurance companies that are doing general and life. When I talk of general, it encompasses motor insurance, it encompasses fire, it encompasses marine that we're going to discuss this morning. Then there are also life companies that look at life and annuities and pension related products. So basically we do license, as I've mentioned, those insurance companies. Then we also do have an obligation of ensuring that we protect the policy holders, and that is one of our main objective, that most people take on insurance, but they probably don't know how insurance works. So our main objective is that we protect the insurance, we protect the policy holders, and by doing so, we have what is called a complaints bureau, that in case of any challenges that that the public out there may come across, they can always get in contact with the authority to help them in resolving these matters related to insurance. It may be a complaint against an insurance company. It may be an issue of interpretation, because some of these policies may be a bit difficult and technical in nature. So here you may come and we help you, take you through these insurance policies. Then again, we do have the mandate of advising government on insurance matters, and more so. That's why we have come up with a local marine insurance cover, that we realize that there is need to have this kind of an advised government to see that we take up. So our major role is to see that we advise. It's not only in regards to marine, we've advised government in regards to other infrastructure projects like Karuma, like Isimba, and many other roads that are being, and projects that are being undertaken by government. Then probably lastly is to carry on with awareness, and that is the reason as to why we are here. As an entity, we are mandated also to educate the public, so that the public gets to know how insurance works, what insurance does, what is the importance of insurance. So we go ahead to sensitize the public and also carry out awareness campaigns so that people are aware of the benefits of the immense benefits, because insurance has quite a number of good benefits. And based on that, plus other functions that I probably could take a lot of our time explaining, but briefly, that is I've just picked the important roles that we undertake as an authority.
Now, Stephen, among the roles you mentioned was protecting the insurance holder.
Right.
Now, Ugandans, much as we've not fully appreciated the role of insurance, but also we've been having challenges, and as the regulator now that I have you, is when it comes to compensation, you talked about explaining the terms and policies. Some Ugandans feel that they have been fleeced when it comes to the other side of the business. My brother Edwin here, that well, I may take an insurance policy. Now, for example, we are talking about the mandatory marina, cargo, and goods in transit insurance. Now, if I'm an importer, and this is mandatory, I take it, no doubt, because it is the law. But in terms of uncertainty, then me being compensated or having benefits of my insurance cover, it's very hard. And I want to begin with this. Why do we have a regulator and this happen?
What I can say is that the regulator has played a major role. Yes, I may say that there are instances in the past that where people had quite a number of challenges here and there, and probably they were not taken care of. But what I can assure you, and I usually want to base on statistics, that insurance companies are paying claims currently, because I have the current statistics, because based on the current figures that we released recently, we noted that insurance companies are paying up to a tune of, it's coming to around 900 billion. So meaning that...
That is every year or since...
That's for the year 2023. That...
Close to 900?
We did write gross written premiums. These are the total premiums of the industry. To up to a tune of around 1.3 trillion. And out of that, 800 and slightly above was paid through claims. So meaning that insurance companies actually do what? Do pay. But of course there may be some instances here and there that that may not be paid. But this can also be attributed to instances that most people in our culture, first of all, don't want to read. So somebody takes on an insurance policy and doesn't take an initiative of reading what is covered and probably what is not covered. It doesn't mean that when you take on an insurance cover, you are 100% covered. There are instances that we may have, and my colleague here may come in, that we have exclusions that probably are not covered. So in instances where exclusions are applied, the public probably that has not been compensated will cry out louder than those that have been compensated. But what I can assure you, Robert, that insurance companies are paying. But as I've also mentioned, that it is very key. For one, if you take on a policy, it's very important that you read your policy in terms to understand the terms and conditions of that policy. If you are taking on a marine cover, for instance here, you need to understand what are the exclusions, what are the conditions, because an importer may be importing goods from China, and probably there is a condition that these goods are supposed to be packed in a certain condition. And if this condition is not fulfilled, for example, you're bringing glass, you're supposed to pack it in a way that it will be protected. So if if it is found out that probably the packaging was not done well, then the insurance company will penalize you, because this is a condition that was put in the policy. So there are those instances, and I do encourage the public and Ugandans to really go through their policies. If they don't understand, as I mentioned, please engage the Insurance Regulatory Authority. We have experts who will explain to you some of these technical areas that probably you may not be able to understand. Then secondly, I think people are also ignorant of what insurance, of the benefits of insurance. I can give you an instance of motor third party. Most of our people in the general public don't understand the benefits of motor third party. What they do, or what they think, is that it is a levy for police officers to bypass them, whereas it has a benefit attached to that. So I encourage, and that is why we are here as the authority, to see that we tell the public about the benefits of insurance. We tell the public what insurance can offer. We tell the public that it is not all about a levy. If it is a motor third party, it is not about a levy. If it is a local marine, it is not all about, because some members may interpret it like it is going to be a levy. No, this is a cover that is here to benefit the general public, to see that it protects our economies, as my colleagues did mention, that it protects our traders and our manufacturers in general.
So still a quick one to you then, as the regulator, how are you going to ensure that enforcement is carried on to benefit the importers or the holder of this marine and goods in transit?
Thank you very much. This has been a journey that as a regulator we've been part and parcel together with other stakeholders like Uganda Revenue Authority. My colleague has been here. And it's because of the pronouncement that was done by the minister, I think in the year 2017, where he gave a directive that all marine cargo, all cargo that is entering Uganda has to be covered. And in that instance, as a regulator, we did come up with guidance in terms of coming up with policies and good guidelines and regulations. We did have the Insurance Act amended to cover for that. And as I mentioned, we have a section in the Act that provides for mandatory insurance coverage for all cargo that comes into. So the regulation is well done, and that's why we are coming out to clearly tell the public that this is something that is in the Insurance Act. Then secondly, we have also prepared our insurers, because we work hand in hand with insurance companies, and in that spirit we've ensured that there is enough capacity. My colleague here has told you that they have come up with a consortium. This is an arrangement that has all the insurance companies. So in terms of capacity, we as a regulator, we are well assured that the insurance industry has enough capacity to take on any kind of losses that may occur. You may see these companies, they also have support out there. When they take on risks, they also have reinsurers. He can as well tell you that when they take on these huge risks, they have protection as well. So all that is being touched in. We look at their cover notes in terms of reinsurance, that they really have capacity to cater for any losses. So as a regulator, we have ensured that there is capacity for the industry, within the industry, to protect the traders who are actually shipping in or bringing in cargo. Then secondly, we have licensed them. These are entities that we have provided we have given licenses, and before a company gets a license, there is a lot of scrutiny in terms of capital. Do you have enough capital? We have what we call capital adequacy ratios that we look at to ascertain that this company is actually good and sufficient to provide a good service. So as a regulator, we are very much satisfied that the grounds are okay, the capacity is available, we have the professional, the technical and professional part of it catered for, because as I talk, we have grown capacity and professionalism. We have the insurance training college that actually rolls out enough, because initially we had that gap of professionals, but apparently we have now a fully fledged college that rolls out professionals. So the industry is well prepared in terms of skill, in terms of capacity, and we are able to move on and have this product handled in a more good manner.
Well, if you're still looking at this becoming mandatory, and I think here as you come in, Edwin, you'll have to emphasize when the deadline is, because Ugandans are on deadlines. That is something always must be very clear about. But also, does this also apply to casual importers?
As my colleague mentioned, there was a launch actually on the 6th of this month by the Minister of Finance, where we had all the different stakeholders that included Uganda Revenue Authority and other stakeholders, the Kasita, and because I can assure you that we've been working with these stakeholders from the word go. We want to have it, we want to encompass all the stakeholders so that everyone is on the same page. We all move in the same direction. So we have the Kasitas on board, we have the Shipping Council, we have clearing and forwarding agents, and all the other stakeholders. After the launch, we decided, the minister in his wisdom decided that there is need to have that window so that people get to understand, because already we have a portal that is on running, and it's actually it's an online portal that will be used to access the cover. So we are trying to engage the different stakeholders, and that is the reason why we have this window from the 6th to end of January. So we believe that effective 1st Feb, this is now going to be. We believe that by then all the stakeholders would have engaged them, and all of them would have, because you need to have them on board so that everyone, this is not, however much it is mandatory, we need, the other parties also need to appreciate the benefit. And basically that is the reason actually why we are here. So it is not about that it is mandatory, that you have to, no, it is also to realize, very key to realize the benefit of this kind of arrangement. And that is why the minister pronounced himself and said, you know, I want to give other stakeholders so they understand, and they gave a window of 2 months, so that by the end of up to end of January, so that effective 1st, this is now fully implemented, and everyone is able to take it on.
Maybe this is what I want to bring in Bukenya for casual reporters. Does this as well come in?
Or personal effects? I think the personal effects might be excluded, because probably what you're bringing might not even require you to pay taxes. But ideally, to me, insurance should be for everyone. Insurance should be for everyone, because like my colleague from the regulator has said, first of all, the rates, the penalty that you would incur as an importer is far much higher. Even as we talk now, if they are using 1.5% to that you pay as a penalty at URA if you don't have insurance from Uganda, is far much higher than the rate, which on average the rates are 0.3. Imagine, that is 30% of what the penalty is. And mind you, when you take on a penalty, when you say, okay, I'm not going to pay insurance and take a penalty, you don't have cover. In the event your goods are damaged, kaput, nothing. You're not getting anything. Yet here, you're paying a much lower premium in terms of the rate, as vis-a-vis the rate charged by URA. But then you also have insurance, that in the event my goods have had any issue, there is cover. There is cover. So we wouldn't want people, I know many people have gone out of business. Many people have gone out of business just because they didn't have insurance. I'll tell you, in this market, even my colleagues here will tell you, people who come, who are foreigners, I would say, when you look at the business people like Asians, I don't think there's any Asian who doesn't insure. Or there's no guys from Europe who have business here who don't have insurance, who don't have comprehensive. We see it. For them, insurance is the first thing they look at. In business, if you are to protect your business, the future of your business, you must take it. Insurance is a must. It's a must. Because you are rich today and you're the poorest tomorrow. If there is a fire, all your stock goes, there's no insurance. If you imported goods worth 500 million and that's the money you had, maybe you've even put in your home as a collateral to be able to get a loan from the bank. You've lost the home, you've lost the business. Yet you would have paid something small, like I've mentioned, an average of 0.3% vis-a-vis the rate of 1.5 penalty that you would have paid to URA. Yes.
So therefore, that is why you should pay for this cover, not just because it's mandatory. And of course, people in business, remember, 1st February, you must have had the right information and ensure the goods you bring in have the mandatory local marine cargo and goods in transit insurance. They have been insured very well. Yes, trying to supplement?
Yes, I just wanted to supplement and actually bring out the value of why we are taking the marine insurance and why we are, the background of why we are having this. We realized we had a study, and several studies have been done, that government is losing quite a number of revenue. We realized that that was in 2013, so many years ago when we did this study, that government was losing to over a tune of 60 billion in terms of taxes. Then we also had situations where traders came to the authority and they were demanding that there were losses that had incurred, probably when they are bringing in cargo, and they were unable to have these losses catered for by the, because as he has mentioned, insurance has been organized or has been arranged by the exporters the other side. So meaning that first of all, the policies they are undertaking are in Chinese. I'm just giving an example, like if somebody is importing from China, that they are in a foreign language that probably most of our traders here may not be able to understand. So there are clauses there. So all of this we interrogated and noted that it is very key for, as a country, as an economy, to have a marine insurance policy and marine insurance cover that is domesticated, that can easily cater for our people here. Just remember that in case a loss occurs, it is an insurance company that is licensed here. And in case there are any complaints, we are now able to, as a regulator, we have a hand in that, because we regulate these insurance companies, compared to a situation where we've had covers out there from either foreign companies that we may not have a chance, or we don't have the mandate to supervise. So this is something that is very good, something that is going to, first of all, increase revenue for the government, provide employment, provide capacity for the industry, and more so provide cover for our traders who have been actually losing a lot in terms of losses. So it is a very good arrangement, and I would encourage all stakeholders, all the public members out there to embrace it, to see that we enjoy the benefits and really not suffer losses as we've been having.
Well, not suffer losses, because when one businessman moves out of the economy because he has no cover for the goods in transit, then it becomes a problem. Jobs are lost, revenue is lost, but also we lose that very person's business as well. Now, time seems to be flying, but I'll just give each of my guests a minute to have their parting shot as we come to the end of the program, and I'll begin with Bukenya.
Thank you, Robert. Parting shot is that I would encourage our traders there to embrace this this insurance that has come up. It will be on the portal, the UIA portal, IRA UIA portal, but you can still also walk to your insurance company. Those people who have already been taking insurance will continue taking the insurance with the insurance companies they've been taking with. Then those who have been taking through their brokers will continue going to their brokers or agents and have insurance. But I will assure you, claims will be paid, claims are being paid, and with the regulator here, you are assured that if a claim is payable, it will be paid, and you'll be getting the all-risk insurance, which is the best in marine. Thank you.
Well, thank you so much, Bukenya John from Jubilee Alliance, who happens to be the Chief Underwriting Officer there. Thank you so much, with that assurance that their claims will be paid. Now, from the regulator, as we move out of here.
First of all, I would want to thank management of UBC for having invited us to this show, because we believe this is a nationwide TV, and we believe a lot has been shared with the public. Then secondly, from the regulator's perspective, I want to say that for us, we are here as a regulator to protect the policy order. And in this situation, in case of anything, in case of any challenges that may arise. It may not be particularly for marine, even any other insurance matters. Our offices are always open to the general public. We are on Lumumba Avenue. You can always approach Insurance Tower and get in touch with us so that we can resolve matters related to insurance. But particularly to this marine insurance, we want to assure the general public that we have grown in terms of, we have touched the capacity of the industry. And we want to assure the public that capacity is available. Our insurance companies can have the capacity to pay the losses. We want to tell you that this is a very good arrangement that is going now to reduce on the losses that we've been incurring, and probably the losses have not been catered for. And we want to encourage the general public that please come first, Feb. Let's have this implemented to see that we benefit and enjoy the benefits of this kind of marine cargo insurance cover that we are providing for this country.
Well, thank you so much, Stephen Kadu from the Insurance Regulatory Authority. With that assurance, I love it when you mention one of the functions, which is to protect the holder. Yeah. Now, important to note, yes, this is going to increase taxation and also create some bit of employment. But for you in business, the most important thing is you don't know when bad luck, if I may use that, will come your way. But how will you be able to recover from that? And the best way is being insured. Today we've been discussing mandatory local marine cargo and goods in transit insurance, protecting your goods from the source till the point when they have arrived safely into your hands. What a good thing it is. Let's embrace this. And remember, there is a deadline. That is 1st February, so do not be caught off guard. Look for all the information that you need. The regulator are here, and he has said their doors are open. So go and make sure you understand these documents very well. I think when getting an insurance cover, the most important thing is to understand the ingredients of the contract that the two of you have, because most of the times you may be caught off guard, and then you sing a song, Batubabupi. Have a lovely day. See you tomorrow, the good Lord willing, for God and my country.
Live from UBC Studios in Kampala, this is Good Morning Uganda Extra.
The Ministry of Health informs the general public that there are some cases of Mpox detected in Uganda. The ministry, working with partners and affected district local government, are doing their best to contain the situation. The signs and symptoms of